Hello, this is John Hardy coming to you from ER2, EliteTraders.com, where ER2 is the E-mini Russell 2000 contract. This video is for educational purposes only, and this video is free. Today's date is November the 23rd, 2007. In front of us we have the ER daily contract. As you can clearly see, we did not get the break in the previous two market action days lower at the 736 area. Instead, inclusive of today's market action again, which would be the November 23rd Friday, this wick that I have my pointer on is inclusive of the November 22nd Thanksgiving pre-market activity. We have basically where we pull back into this channel and we basically try or we test this area that we made mention of earlier of the 760 that we need to thrust through it the second time. Condensing the chart, you can see clearly that we are in this channel for approximately a month and a half, this downward channel. And the 6-day channel here where my mouse is zooming up and down it is basically we have come out of it, but the question remains whether we are sucked back into it unless we pull again above the 760 area. Looking on a 5-minute chart, the daily action is that we gapped up, pulled back ever so slightly, retested this channel line, this 5-6 day channel line, retested it, slung out, pulled up to the 760 area that we made mention to, and now, as we have said before, does this market action pull through it the second time? We basically put a small position here just before the close, and we don't know really how far this will drop down or whether she continues, but we are expecting a revisit of the 760 area. Pulling up the IWM chart, one can see that we do have sideways action. We did want the IWM to break the 730 area to the downside, and we would be buyers of it. Instead, what we did was we pulled back into right up against the lower portion of its own channel. You can see the sideways action. Our best hope is basically a retracement back into the channel at the 60% area, or the 60% retracement area of this downward channel. Let's look at the S&P E-mini contract. The 30-minute chart basically clearly tells us that, let's look at the hourly chart, tells us that basically, you know, we have more upside action, price action to prove to us that we are out of this downward descent from approximately November the 1st. Daily chart of the ES. As we showed yesterday, this being the breakout line of the head and shoulders, equilibrium symmetrical, we went down below it, and just to prove that fact, the top to the breakout line that that we're presuming would be that area gives equal credence to these open and price lows dated back in the August 16th, August 15th area. Price action went through it, pulled up into it. On the spiders, however, the SPY, we have a different story of symmetry. This being the top, measured down to the breakout. We have not arrived at equal symmetry. Come on, baby. There we are. Which would bring us basically to the 139 area, which would confirm with the open price of the SPY here on August the 16th. As you can see, price action has not come down to it. So the reason for showing that is, you know, traders are discretional and few are alike from where they gather their data. Either you take it from the SPY or the ES, you know. whether this market action comes down and revisits this price slow, or whether we basically revisit the upper portion of the channel. I do not have personally an analysis on that. So basically, being a primary ER trader, what I am looking for, as I said earlier, is I am looking for a revisit to these 760 areas, approximately 758 area zone. That therefore, as I'm saying, we took a small position here in our day trading account, very small. We did not get the pullback, so we took a very small position here, approximately one contract, no big deal. If she pulls further down on us, no big deal. If she whips up, okay, we've made a few dollars. Let's look at the euro. It's kind of interesting. On the euro, this channel that we've been working since mid-August, we hit the upper portion of it. Bear in mind that we are coming into an even number, the 1.5 zone. So we open up higher, 15-minute chart, we open up higher and we sell off. Does that mean anything? I don't know. If it had, I would say this, if price action had come up a few pips higher to the at least to the 1.5 in that zone, even though we are at it, I would myself have taken a short there. Bringing up the weekly chart on the euro, you can see we are just in a microcosm, a small area of what this currency has been doing for like the last portion of since 2000 and 2000 even. 2001, 2000 even, the mid part of 2000 even, to the 2002 almost. Basically we have a low to the upper portion of the 2004, latter part of that year, 2004, latter part we have a fib range with an extension, 1.27 extension coming in around 1.5. So basically we do not trade the euro, but if it had basically, you can see where it came ever so slightly right there to it of the 1.4977, very close to the 1.5 even flat zone, and then she pulls back. We may, or that is the euro may have, I say may, cautionary may have a short-term high. She may have a short-term high. Okay, this candle's not reading right. This should be a red candle because she opened up and to that area and she sold off. So basically my refresh here is not giving it to me. Nope, not giving it to me. Okay, back to the ER again. We are looking basically to revisit this area, as I said about 3 or 4 times already, 760 area. Okay, wishing all of you, and I'm sorry, one more thing. Down here at the bottom on this sell-off, on the push-up of the ER, we had increased volume, climatic volume on the 5-minute chart, thrust down. This one candle we have increased volume, and volume begins to decrease as we descend lower. So, that's discretionary, the interpretation of that. Okay, wishing everyone the best of this upcoming weekend, and be safe. The best of goodbyes from John Hardy of ER2EliteTraders.com. We'll get back at it Monday.